3, 2, 1.
My name is Nick. I'm a full-time trader and entrepreneur. We put out tons of stuff for free for traders. These are real trades. This is real money. I'm putting my money on the line. This is going to be a live trading video here, locking in over $1,000 on this trade.
Wow, I'd love to get in on this.
Technical insights that really look good to me.
Here we go, we're live. Well, hello everybody. Welcome back to the show. Thank you for being here. We got, 135 people already in the chat. Good morning, everybody. Thank you very much for being here. Let me see if I can get that all situated. I want to make sure the sound is good today because yesterday we had some sound issues. How's everybody doing? Thank you very much for being here. Got a bunch of people in the chat already. Good morning and good afternoon to Sudalai, Andrew, Denise. Good to see you, Dade, Hope, Calvin. Good morning, everybody. Thank you for being here. Hope you're doing well. So markets are kind of crazy right now. Not going to lie, this is kind of a really a pretty out of nowhere big move that we've seen going on. So what my attempt to do today is to try and cover everything to the best of my experience, my knowledge about what is going on, and to try and hopefully give some sort of clarity to kind of what we're seeing happening in the markets. We're going to talk about the dollar. We're going to talk about gold a little bit. And then we're also going to talk about stocks. And actually, I want to start today with the stock market. Now, a lot of you guys might be like, well, I don't trade stocks, but remember, especially if you're a newer trader, it is important to remember that different markets, they move together, right? So they don't, markets don't act completely independent from one another. You may trade Forex, but without even knowing it, you're sort of correlated to the stock market in the US or, the stock market in Europe or something like that, right? So markets around the world, they talk to each other. They have different, names and stuff like that, but they all are sort of somehow related to one another. So I wanted to start today and just show you guys here that the S&P 500 is down today. We have a big reaction out of Asia right now. I think Asia had some serious sell-offs go off in the Asian stock markets as well, and it is trickling over here into the US and also into the currency market as well. So what I'm going to do is I'm going to try and explain everything that's going on for those who are just confused about it, and then we will try and look for opportunities or just kind of make at least some clarity out of everything that is going on. So we've got the stock market coming down hard today. Really quick, pretty aggressive move to the downside there on all of the indices. We'll take a look at NAS 100 as well. And then you've got US 30, and all of these ones are taking some big dips, right? And so off of the back of that, what the big thing here is that yesterday we had the Fed talk about, and I'm just going to put this full screen for a second. So yesterday, the Fed, they talked about basically wanting to or not seeing quite what we need to see before completely removing stimulus and looking to raise rates aggressively or anything like that. They're still, they basically iterated that, as much as they want to continue to grow everything and to prop up markets and then eventually step away and even raise rates, what we got from them was sort of just this, okay, let's just wait a sec, let's calm down for a second. And that by itself was not a massive reaction. But then out of some of the Asian markets, specifically China imposed some, I think it was some what do you call it? Not bans, but fines on some of the big stocks, for example, Alibaba, and this caused a big scare in the Asian stock market. They also have talked about wanting to over there in China, they want to reduce stimulus and look to step away so that banks can start to make money, et cetera, which had also a negative effect to some degree for some of the stocks over there, which now we see trickling over here into the US. So with that said, there's a lot of stuff moving today. We see a lot of strength coming in on the Japanese yen today. In fact, let's look at the JXY. This is the Japanese currency index. Just like we have the DXY, we also have the JXY, and you can see what was this strong little downtrend here actually popped here and gapped open here dramatically. Now the question here for the yen is this a move that is going to dramatically increase? Are we just going to keep running from here? Are we just going to gap and continue higher? Or is this going to be a gap and then fill the gap and maybe we see some strength overall? Right now, I think the big story is that we do have a little bit of concerns from from Asia and also from other parts of the world, just in response, saying, okay, well, if we're sort of underperforming, if we're slowing down here, that brings back some of the risk off concerns. Things like the Japanese yen tend to do well. Things like gold, which we will discuss in a little bit, they tend to do well in all of this market volatility. So we actually saw the gold market do quite well today. So maybe we'll take a look at that in just a bit. But I just wanted to clarify, so we had some market scares right now, some reactions to it, and we're seeing it trickle into the currency market as well. So we can take a look at things. For example, we've got the DXY here as well. Let's take a look at what the dollar is doing today. So the dollar is pulling back. So we see a lot of sell-off on the dollar, and we see some money moves into the Japanese yen. So that, again, that is a response to the news, that is a response to the risk off sort of scary environment. We actually see the dollar giving back some gains and a lot of flocking into the yen. In fact, let's go look at the currency heat map today just to see everything from a bird's eye view. We'll head over to a1trading.com. This is our website. Feel free to come here anytime you want to read up on articles or use our free tools here. So I'm going to head over to the currency heat map and check this out. So on the heat map, what we can see is that the yen today is quite strong. You've got it moving up 1.5% against the CAD, 1.7 against the New Zealand, 1.5 against the Aussie, and 1.15 against the pound. It is also beating out the US, just under 1% there today. But again, just a lot of strength across the board coming into that Japanese yen. Now, I have been short biased in the Japanese yen, so this has been a little bit of a struggle for me, but I am looking just to take a step back, pause, and recalibrate everything when it comes to risk on, risk off sentiment. I'm sort of waiting to see what the next big sort of stand is. Is the Fed going to respond to this? Is this going to be something that lasts a few months, or is it going to be like a blip, or et cetera, right? So what I will be doing today is I'll be going through some of the yen pairs and also some of the dollar pairs. These are going to be our main focus today. I guess also I should mention, of course, we do have the Swiss franc as well. So the two major risk off currencies, places where people park their money in times of fear, they are rallying today. So that shows us there is some fear, there is some concern for markets right now. So again, and that's a big response to the stock markets over in Asia selling off. In fact, is it NK225? Yeah, so here's the futures for the how do I pull that up? There it is. Here's the Japanese stock market today. So you can see the Japanese stock market taking a nosedive there. Really, really strong sell-off this morning, or I guess overnight for us in the US. But over there in their session, they absolutely gapped down and kept going lower. Lots of strength to the downside. And we see this being a major, major catalyst. If you're not familiar, the Japanese stock market is sort of used as an index or a benchmark for a lot of Asia, right? Because a lot of Japan is a major economy over there, and so a lot of times the way that their stock market is reacting to something is sort of a general idea of how the markets over there in Asia are perceiving everything. Again, we saw a major dip down to this level, so we will see if price wants to keep going and break through the lows. If that happens, you may see risk off for a while here. We may see the Japanese yen here to stay for a little bit. But again, watching to see both the stock market as well as that JXY. These two tend to work against each other, right? So when one is going up, the other is usually going down. So again, if the JXY, if the Japanese yen continues higher, we could see stock markets around the world, especially in Asia as well, moving lower. So again, we'll see how that wants to play out. Let's go take a look. Again, I said the DXY was also one I wanted to focus on. Watching to see if the dollar can hold its gains today, or if we're going to be giving back some more of this gain that has been going on with the dollar. So let's look at the daily chart for a second. I don't think we did not make it to the target just yet that I pointed out up here, which is 93.4. I've talked about that one a couple times. I still think that the dollar has room to head up to that level. If that does come into play, then I will, I'll be looking to ride that momentum. But for right now, it does look like the dollar is weak today. So again, kind of on the sidelines for me, just with everything going on, a lot of volatility due to that news. And so watching to see if any of these levels want to hold will be a big deal for me as well on the dollar bullishness thesis that I have. So I'm looking to see if some of these, if some of these levels do get tested, how they react. And of course, a big level would be for the dollar to break through the previous high there, which we can mark as supply as well, up there at 92.75. So kind of in the middle of that range. We'll see how this one wants to react. If it can break out and continue higher, then absolutely we'll look for those plays. That'll be something that I'm looking for myself on the US dollar. And then again, going to be watching how levels like 92 flat react. If they hold very well, then again, I think the bullish thesis is still intact. But again, with a lot of volatility coming in today, just going to be watching how things react. And I do also want to say that in 20 minutes, we have the US stock markets opening, and sometimes we do see some volatility out of the gate. We will see how everything reacts on Wall Street today, because again, that news that was happening in Japan. Sometimes you get something where the markets open up in the US and then it's just a major buyback the other direction. And other times you get a continuation of the selling that was going on in previous market sessions. We don't know what's going to happen, unfortunately, but there may be some momentum plays either way. So maybe we can talk about those opportunities as well. So let's go take a look at some of the individual ones. We'll take a look at Euro USD today, which was bouncing back from the last I looked at it. You can see it really sold off the last several weeks here on the 4-hour chart. Remember that we marked up this a couple times. I cleared a lot of my charts today, by the way, because I just wanted to draw a lot of stuff fresh today. So we will be drawing in some new levels here. So of course, we've got the previous tops, the previous levels that we've talked about many times here on the streams. But again, with the euro dollar selling off so dramatically, I still think that it is reasonable to expect the euro dollar to head down to this level that we've talked about, which is 1.1725, somewhere in there. I feel like I've said it different ways each time, but this zone here, this previous low back in the end of March of 2021. So I think that it is possible to see prices head lower there. So maybe we could get some pullback opportunities in the meantime with this. Again, the euro finding a little bit of strength today, which is kind of interesting. You know, the Europe is one that I'm not super bullish on personally. So that's why I have sort of a short bias when looking at this, especially in context with my bullish dollar thesis. But again, going to be watching the index for a lot of these just to see how things react overall. Euro USD sort of finding some short-term resistance here. If we zoom in just a little bit, it is at a little trend line level here. If you want to draw it in like that, right? You've got this trend line that's being tested and sort of this downward channel going on right now. So of course, when we look at channels, there's always the scenario of a continuation or a breakout. I think most likely when we come into this level, this could be a sell down to something like I said, that target at 1.172, somewhere in there. Of course, please remember, this is not like financial advice. I'm not telling you what you should go take trades on or anything like that. These are just my opinions and my thoughts. And so I'll roll the disclaimer there on the screen as well. Please remember, like, trading is high risk, and it could be very dangerous to people who don't know what they're doing. So please educate yourself, take the time to learn about risk management and things before you place any trades, especially in a market environment like this, where things are dramatic and intense and can move really hard against you if you're not careful. So again, with the Euro USD in this channel, question will be, if we hold the integrity of this little downward channel here, can we make that push down to 1.174/1.172, somewhere in this range that we have marked? Or flip side, if things get worse in terms of risk off, maybe we see price actually get a clean break going here, maybe a close above this previous level of resistance. Something like that could be interesting for continuation plays on the euro dollar. So yes, that is kind of a both ways analysis, but the point is, you know, for me, like I said, it's sort of being reactionary with everything going on right now. If we see things worsen, then I will probably be looking to buy maybe some of the risk off currencies, which could be an interesting thing because I have been mostly risk on for a while. But again, we've got reactions out of Wall Street in about 15 minutes once the market truly opens in the New York session. That should be interesting to see how everything plays out. But again, euro dollar, if I was to pick a direction for me right now, I would say mostly bearish for the euro dollar. Like I said, sticking to my plan of looking to see if we can get 1.172 come into play. Now, of course, I could be completely wrong about that, and that's the whole point with having your own trading plan and understanding of what you're doing anytime you place a trade. I can remember there were times when I was a brand new trader, I would go onto somebody's stream and they'd say something bullish or bearish, and I would think, oh, well, they said bullish or bearish, so let me go take a trade. And when it would work, I'd think they were the coolest person ever, and when it didn't, I would just blame them, right? But trading is really, really destructive when you look to blame other people. It's like a quick way to never make any money if you're going to blame other people for your mistakes, other people for your own decisions, because as a trader, it's different than like if you drive a car, you can just drive a car and get in there and you don't really have to know what's going on under the hood. But it's different with trading. Trading, you have to know what is going on under the hood, why you are taking the trades that you're taking, what is your risk, what is your risk tolerance, what is your psychological barriers that you face as a trader. These are things that no one else can do for you. You have to understand them yourself. So again, euro dollar, really an interesting one. I also want to point out that we do have this level of resistance here. So going to be watching to see this one. Actually, a really interesting level there for euro dollar today. Can that hold? We will see. I would say that that's a pretty decent area of resistance. And again, you've got that channel to the downside overall. Again, also going to really just depend on risk on or risk off sentiment today. What happens for the rest of the day could really impact euro dollar. You could see euro dollar by the end of the day. If this level doesn't hold, I would keep stops personally pretty tight there, because if price were to break, we could shoot right on up through that level as well with euro dollar. That's sort of the nature of a risk off environment. Sometimes you see these dramatic changes in direction. Like all of a sudden you see the Japanese yen just shoot higher like crazy, and you see the euro potentially go higher. Let me just show you guys really quick what that looked like in the daily chart for the euro USD back in 2020. So 2020, the euro dollar had been going down for quite some time. I was very short biased on the euro dollar for a very long time. Then we had stuff from the Fed and talking about raising rates, cutting rates and everything like that. And we saw the euro dollar just start rocketing higher, and it just kept going and going. If you guys are real long-term viewers of the channel, you'll remember I was very bullish on the euro dollar during this time. Once we really shifted into a risk off environment, for some reason, the euro just did dramatically better than expected, and there was a lot of long side potential. So if risk on is back here to stay, risk off is back to stay, you could see the euro dollar rally here from the lows. So I'd be on the lookout for that and watching to see what the Fed says or what reactions are from sort of institutional traders here. Will also be interesting to see the institutional actions on the COT report this week. We will get information on that Friday at 3:30 p.m. Eastern. That comes out once a week. So we'll see how that one wants to, or how things look on that once the end of the week arrives. Let's take a look now at USD CHF. This is the next one that we wanted to cover. Very, very interesting. I'm going to draw everything fresh here. So dollar Swiss is really interesting to me right now, because you do sort of have this level of support that is testing right now. So if this holds, obviously that could be very good for the bulls. But again, if it breaks, you have a pretty clean shot all the way down to levels like 0.98. And then even further from there, you're talking supports down at 90.4, so or 0.9040. So that's quite a ways away. So again, if this holds, it could be a very bullish thing for the dollar. You could see breaks above and continuations. There's a fib for you as well. You got the 38.2 just there. So maybe trades in this region with stops below somewhere could be reasonable to me. But again, we will see how everything reacts. We did technically put in a lower high here, so going to be watching the dollar Swiss closely, because this one is definitely a risk off contender. We usually see the Swiss franc get dramatically stronger in a time of risk off, right? We see people flock to the dollar Swiss. So we'll see how that wants to react here as we go into the end of the week. Again, Wall Street opening up in about 12 minutes, which could cause some volatility for a lot of the different currencies. Calvin says gold, don't worry. We always take a look at gold. We will get there. We're going one step at a time here today. We got a lot of stuff to look at, so be patient with me. What's your opinion on UK 100? UK 100 probably just like the other stock markets around the world right now. I think it's probably going to do just mostly what other stock markets are going to do right now, which is, just react. Either, we get a bounce back really hard from, some sort of shutdown of fear from the Fed or something like that. Or if the Fed doesn't step in and we see continuations of yen strength and stock markets struggling around the world, I would imagine that the FTSE would also perform poorly as well. It's been really stuck in a range here, so it does have room to come down. If I were to just mark a technical level, maybe you have support somewhere here, and then that's pretty much it. I probably wouldn't personally be jumping in on UK 100 or any stock markets right now, just because we do seem quite overextended. Looking at the S&P 500, similar to the UK 100, you have room to come down here to like 4250, which is a level of support. And from there, even you have levels like 4170, 4050. You've got a pretty good ways away before you find significant demand on some of these markets. So I would just be cautious watching the stock markets. For me, I bought probably my best trading ever occurred right around when I started going long on stocks back here. But that was because I sort of forced myself to wait as long as I could to get in on stocks. I ended up taking some trades. I took some investments. Probably the bulk of my trading career was made on the previous dip. So I'm not afraid of a dip because it has plenty of opportunity to potentially make good money. Of course, nothing is guaranteed and things can get really scary. But the whole point is, I'm not afraid of a dip because a dip is usually a good opportunity should you choose to be patient enough. So I probably wouldn't rush in to go long on stock markets up here. So that's just my personal opinion. Please remember, as always, like, this is not financial advice, especially when things get really scary like this. I always like to just really caution people, because there's a lot of people who see this and they're like, "Oh, let me get on this," and they go all in on something and they get themselves into a lot of trouble. So please be careful out there. Let's take a look at dollar yen here today. We'll take a look at the yen here, which is trading lower overall, again, as a response to the Asian market getting all scary. We saw the Japanese yen strengthen dramatically, which something like the dollar against the yen tends to react very bearish to, right? So as people go from they buy into the yen, right? If they're buying the yen because they are looking for somewhere to park their money that's a little bit less risky, quote unquote, the reason that the Japanese yen, and I've talked about this many times, but it's in a different context today. The yen tends to get strong in times of fear because people put their money in the Japanese economy, which is sort of this like slow and steady grandpa economy. Right? It is not necessarily shiny. It's not going to like double and triple next year, but it tends to be reliable compared to other places like the UK, like Australia, which are more volatile but can offer more returns if you're in a market environment that is suitable. So we're seeing a lot of flocking into the Japanese yen right now. And the question is that going to continue? Short term, very possible. Long term, I'm still hesitant to be a buyer of the yen, but we will see again how everything reacts today. And we have 8 minutes or so here until Wall Street really opens up. And that's where we could see some more volatility. So we will see. The dollar here, again, getting weak compared to the yen. We're seeing the dollar sort of across the board get sold off today, which is really interesting to see. We see the dollar getting weaker relative to some of the other currencies, which a lot of times the dollar tends to do well in a risk-off environment. So I was kind of confused by that today. We do see, however, some of the other crosses doing poorly against the dollar. Here's the pound dollar, for example. Let me draw this one fresh. We'll take a look at the pound dollar really quick. So the pound dollar here is moving lower overall. We see a lot of bearishness on this currency. I've marked out this level on the daily chart a few times. I'll pull this one up. So the pound dollar, oh, thank you, Lily. Appreciate you putting in the label there. So we're looking at GBP USD. So 1.37 looks really interesting to me for the pound dollar. Should things continue, I've talked about this a couple times recently. This was a short-term target here for me on the pound dollar. I do still think that is probably going to be hit. We see right now, even though the dollar is weaker against things like the yen and the Swiss franc today, we do still see the dollar doing okay against some of the more risky currencies like the pound and like some of the other ones out there, right? So the pound really suffering today. We can head over back to the currency heat map and just show you that again. The pound is struggling today, but even more so than the pound, check this out. So you have the pound hurting today, but you have these risky currencies like Aussie, CAD, and New Zealand just getting really smoked today. So again, very, very interested to see how that plays out for the rest of the week and how we even go into next week. I will say holding over the weekend may be very scary. Depends how the rest of this week plays out. Because sometimes you get big news like this, and then it just really gets worse over the weekend. That's what we had happen back in the March of 2020 crash. We saw a dramatic move over the weekends, right? Because the currency market really trades 24/7, but a lot of brokers, because they have customer support and they have to manage clients every day, they only operate 5 or 6 days a week. But the markets itself, when you go to the store and use your currency, you are actually engaging indirectly in the currency market itself, right? You are building or decreasing the supply or demand of the currency that you're using, right? And so that is something to think about as well. So it actually trades 24/7, and that's why we sometimes see gaps over the weekend. So yeah, so I'll give you an example. Euro New Zealand was one, or actually Euro Aussie was one that I traded back in 2020. I've mentioned this before. This one was a really painful situation for me. I took a couple trades in here on the short side, and it did not go quite well back in 2020. So here you can see this gap. I remember being like, oh my goodness, this is pretty intense. We saw this thing gap up over the weekend, right? So things were getting kind of crazy in the markets, and then it paused, and then we just gapped and kept going. So be careful out there. Holding over the weekend can be scary if we get a big gap like that. Just depends how things react the rest of the week. We've got 4 minutes here until the US stock market opens up. Again, that is Wall Street and has the potential to cause some volatility in stocks and currencies alike. So we will watch that here in just a few minutes. Euro New Zealand, while we're looking at it, you can see again moving higher, a similar reaction to what we saw back in 2020. We saw a dramatic increase on Euro Aussie overall because you have people buying euros, right? I know this is obvious based on what we're looking at, but I want to explain a little bit deeper. So you have people buying the euro and selling the Australian dollar. Why would people do that? Well, the Australian dollar is a riskier currency. It's a currency that is an economy that is less developed than Europe and the US, right? So when you get big scariness in the world, the first thing people tend to do is they sell off the Aussie. They say, nah, not holding on to that one. I'd rather hold on to something that is more stable, like the euro, the yen, the dollar, the Swiss franc, right? The big ones out there. The big ones, as a currency or an economy gets bigger and bigger, it tends to be a little bit less volatile and a little bit more reliable for investors. So that's where we see things like the Euro Aussie skyrocket in a time of scariness, right? Pandemic situations. So watching to see how the Euro Aussie, this could be one to watch if you are looking to trade risk off. If risk off continues, Euro Aussie could be a big play there. And I will probably be making videos about this stuff a little bit more in detail. So if you miss everything I'm saying right now, or it sounds like I'm going too fast, don't worry. I will try to put out some form of video, just sort of clarifying everything that's going on. But yeah, let's take a look at gold now, XAU USD. What do you guys think about gold? I want to get a vibe check from the chat. Are you guys bullish or bearish on gold? Hey, moderator, please ask Nick to do the analysis in a list. That's a good idea. Maybe I'll do it. But for me, I kind of jump around. I basically go around to what people seem to be wanting to do, as well as just, what I'd like to look at myself. So it's kind of hard for me to pick a list when things are moving in front of us. Okay, bullish on gold. Lots of bulls in the house for our gold trading friends. Currently long, says Porsche. Interesting. Cool. Bearish in a few hours. Gold looks healthy. Bullish in July. Looking to short gold. I prefer jumping. Look for gold. Long for gold. Bull. Inflation fear equals gold. Bullish. Okay. Still bearish, says Gerald. Okay, so let's look at this. because now we're at a really interesting spot with gold. With gold right now, you see gold holding its own, which is actually not so surprising. Remember that I mentioned many times on my streams and on my channel that gold tends to behave as a risk off market, right? So what that means is that people usually stock gold, or they hold on to gold, they buy gold into their accounts when they're concerned about things like inflation, when they're concerned about markets collapsing. Why would you want to hold stocks in companies that are dying instead when you could be holding gold, which has over time, performs steadily? Now, gold is not it's exciting to the traders out there because, it seems like this thing that moves like crazy and it has a lot of volatility. But truthfully, over time, it has performed kind of slow. It's done like 3% a year for a long time, which is a really slow and steady growth. But a lot of times traders are trading it on margin. So we've got the stock market open up here in just a minute, by the way. So maybe we'll see some volatility on gold. Let's drop down to a lower time frame for just a second. So gold here on the 4-hour chart, looking at things here. So we do see price pulling back on gold. The question is this going to be just a pullback, or is this a full-blown next wave for the gold market? And we are right back to this level that we talked about. In fact, earlier this week, here's a supply zone. So we are right back to a key level here on gold. We are at a big level of resistance here at the 38.2. And it's one of those things. If gold can hold this for the sellers, I would say if this thing holds and breaks sort of downward here, I want to show this too. Let me see if I can draw this on the 1-hour chart. So you've got this kind of this upward trend line here, right? You've got this very loose upward trend, higher lows being formed on the gold market on the lower time frames. And then on the 4-hour chart, you've got this lower highs, bigger picture, sort of looking bearish overall, right? The question though is that as we get started here into the New York session, the stock market opening up, if traders perceive this thing as a sell, right? Watch for the break of this level, because if that breaks decisively, if we see some lower lows here, we could see gold walk its way right on back down to the lows. Now, I'm not saying that that's what's going to happen. I'm saying that that is one scenario. The other scenario is watching, because the truth is I don't know, right? And this is the tough part about markets. I don't know what traders and investors are going to do in terms of their reaction to the Asian market selling off, the risk off questionable situation that we're in. Are we going into risk off? Are we going to stay risk on? That's the question. And so I don't know that. What I do is I try not to predict the markets. What I try and do is react to what they are actually doing. So if it starts to sell off, if we start to see momentum, I'd be interested in looking for pullback opportunities on lower time frames, looking to try and potentially capture this as a pullback. On the flip side, if we see a absolute strength movement here for the gold market, very likely that we could see prices move up right on up to the 61.8% retracement and this major resistance here at 1850. So either way, I think that there could be some trade scenarios on gold. If you trade it specifically, watch for risk on or risk off sentiment. We're just watching to see what the news is, to see what the price action looks like in response to everything going on. So real quick, we'll take a look at the lower time frames here on the 1-hour chart. Again, we're at a level of resistance, so I'm not going to assume it's going higher just yet. I'm not going to rush to go buy gold or anything like that. But if it shows signs of breakouts, if it shows strength here, maybe there is some continuation plays there on the bullish side. Let's see, is there any reaction here on the yen? Whoops, that was not the right chart, JXY. The yen here going into the New York session, we'll see if this thing wants to hold its gap. The question is also if the JPY, if the Japanese yen starts to fill this gap aggressively, it very well could come right back down. We've seen that before as well. I bet you the VIX is the UVXY. I bet you that has gapped up today. Yeah, so the UVXY, this is the VIX. We can actually look at the VIX if you guys prefer. So the VIX is actually trading higher today. This is the 1-hour chart. So it launched higher. And now we're seeing a little bit of a cool down here. And what is the response in the stock market? Let's see, SPX 500. Seeing any? So we're seeing a little bit of strength here. This is the question. The question is, can this actually hold its own and continue higher overall, or is it going to break the lows? I would say a big thing here today is that one short trade that could be very, very interesting would be a breakout through the lows of the S&P 500. Now, I do not like to short this thing very often. It is quite a volatile mess. When you're trying to short it, it can just dramatically pull back and then go all over the place. It also tends to, over time, go up. So I tend to be looking more to go long on this. But maybe there's some short-term opportunities. If this thing were to break lower underneath the lows of the day, you could see stuff like that, and a pullback to those deeper levels that we discussed a little bit earlier on the higher time frames. You could walk it down on S&P 500. So yeah. So again, looking strong here out the gates. We'll see if that can hold. We'll take a look back at things like USD JPY. Is this one moving at all? You can see it's kind of just flat here on the open. What about pound yen? While we're looking, I know I'm going all over the place, so I'm sorry to the producer behind the scenes. I'm jumping charts like crazy, but thank you for helping me out. So pound yen, GBP JPY, this one is another interesting one. This is like the ultimate risk on, risk off vehicle. So I would say, similar to gold, this one is really interesting to a lot of traders when you look at pound yen, because it is quite interesting, because you're talking about something that is quite risk on, which is the pound, right? They separated from Europe, everything going on over there, right? They are a more volatile economy, less diverse than something like the European Union, which has, Germany and Spain and Italy. You have lots of different economies built into one overall currency. So with the pound yen, you're very exposed to a risk on or risk off move. So you can see this thing sold off just massively. You see a dramatic drop on the pound yen here. So after this swing high, we've already seen a drop of 400 pips on the pound yen. So this thing really, really moving lower here today. And so the question is, can it hold those losses, or is the gains, or is the buyers going to come in and step up on this one? And I would watch this daily candle big time, because if this candle, there's been situations where something like this happens and then a strong buyer steps in, right? You get really big buying pressure, stimulus, whatever, the Fed says something, and it just dramatically pushes price the other way. So I would watch the daily chart today. If you're very confused today, I would sit out personally. Like I said, I am sort of on the sidelines for the most part with this stuff. I will be looking to potentially buy stocks if the market dips more, but for now, I'm sort of just sitting here watching everything and being like, okay, let me see what the latest data tells us, what the latest thing is, because it is quite confusing when markets drop all of a sudden. Do you buy the dip dramatically, or do you try and wait for a deeper dip? And if only it was that easy that we could all just be like, oh, well, obviously you just fill in the blank. But the answer is, watching for some confirmation, watching for some sort of signal here from either the Fed or some, if the Fed came out and said, yeah, we're kind of miles away from where we want to be, you could see the markets just drop in a second. On the flip side, the Fed could come out and say, well, we're still on target to do this, this, and this, raise rates by whatever, and that could dramatically push the markets higher. So it's one of those things. It's very difficult to trade in a rapidly moving market like this, because you really don't know what the central banks or major figures will come out and do. So I would say pound yen, I'd wait for some confirmation. I have had a bullish bias on this thing. I would say that for a bearish thesis to really take place for me, I would like to see this candle close very bearish and to really start, showing signs of lower highs, lower lows, which we have put in a lower low here. So that's a big question mark there, is can we hold that candle today, or is it going to dramatically pull back? If it does hold well, then maybe start looking for pullbacks there, and even looking to go short on the pound yen if risk off does look like it's going to continue. Yeah, I have no idea what's going on with the markets. It's kind of a crazy place right now. I would be very, very careful. Like I said, Jonathan, I would say you should not buy gold. You should not sell gold. You should have a strategy and reasoning for why you're going to take a trade. Someone in a chat like this, they could say, oh yeah, buy gold, or oh yeah, sell gold. But that doesn't do you any good. Even if I told you what I think, right? You should have your own decision made up based on a strategy that you've tested, based on your risk management tolerance. We don't know, nobody knows in this chat with certainty where any of these markets is going to go. We can have an educated guess. We can make a prediction that, or something where we can potentially make good profit if we're right, or risk small if we're wrong. Those are the tools that we have as a trader, but none of us know with certainty where a market is going to go next, right? We'll jump back over to the S&P 500 here again, just to see what the reaction is looking like. And see, there you go. You've got those quick gains already being wicked into. So we'll see if those sellers are actually able to push through the lows. If they push through the lows, very likely that we could see steeper sell-offs today. So I would watch the lows if you're watching the US indices, and also, that could be a big signal for JPY currencies as well. What about Euro Yen? Euro Yen should be an interesting one today. You can see Euro Yen sort of holding the lows pretty well. Euro and Yen both sort of acting as risk off right now, though Yen is probably preferred for risk off. So we are seeing this thing sell off overall. Let's look at the 4-hour chart for this. Again, putting in a lower low on another Yen pair. This is a big deal for Yen traders today. And again, here's another example. Can we see this currency currency pair close today's candle like this? And that's the question, really, because if you get something like this, that could be a signal to go long for the next week, right? So that's what I'm watching for today. I'm watching for this daily candle to see how it closes. It could also, by the end of the day, be doing something insane, like dropping way through the floor, right? That's also not impossible either. Remember back here, look how aggressive those sell days came in. Now we're seeing 3 days down here. Is that the tail end of it? Are we going to find demand here at the support? Again, I'm watching for the candle to close to see how things look at the end of the day. That's personally how I'm looking. What's your view on USD CHF? I looked at that earlier, but I would like to look at it again. So dollar Swiss is really testing the limits of this support zone right now. If you're a super dollar bull, maybe this is a pullback opportunity. But I would say, like I said with the other candles, sort of sitting on the sidelines and watching to see how everything closes today. So dollar Swiss, if it shows some wicks on the bottom here towards the end of the day, maybe that's a signal that dollar Swiss is not going to roll over just yet. But you've also got the 38.2 in play, which is something that I pointed out earlier. So, 38.2 from the low to the high, that fib drawn in gives us a couple levels of potential support if this thing wants to hold them. I could see myself looking to get long on dollar Swiss, and then potentially putting stops underneath, and maybe trying again if we dipped further. That's one part of my trading strategy is I'm not afraid to potentially re-enter into a trade. If my first entry was not great, it's not the end of the world. I can look to re-enter reasonably. So that's kind of one of the things to think about with dollar Swiss is I do like this currency pair long, but again, with that massive red candle, I'm just being hesitant to jump into anything too quick. Hopefully that helps. I know I'm not giving quick ideas like today, like I have in the past, or my favorite trade setups today, but that is mostly because in this sort of environment, I'm just trying to play it safe. I'm trying to pause and to take it slow with everything going on. And all of a sudden tomorrow we could see this triple the distance down, right? You could see a massive sell-off if things really got scary in stock markets around the world. So let's jump over to the Nikkei 225 one time again. So this is the Japanese futures market. So you can see holding the lows for now, similar to the US stock market. We've got this wick on the bottom. It's just a question of, can this hold? If it does, you might have some great returns, looking to buy the dip there. But again, we don't know how this candle is going to close, and should be interesting to watch. Back over to US 30. And again, I know I'm jumping around today. There's just a lot of stuff moving. US 30 forming a little bit of a pin bar here. This is a 4-hour candle, and there is how much time is left on this candle? I always forget where that is. Okay, yeah, 17 minutes left on this candle, you guys. So I'd watch this pretty closely on the US 30. This is interesting. You've got the pullback here looking pretty sharp. But the question is, if this candle can close with a nice little pin bar with a long wick on the bottom, maybe that finds some demand. Maybe it finds some bigger support here off of the retest. Stock markets are open now, so they are moving pretty aggressively. So we'll see how everything wants to play out. But 16 or so minutes here left on the candle. So maybe some trade opportunities. US 30, of course, is a very, very high risk instrument. So please be careful if you're looking at that one. We'll take a look at some of the other US indices while we're here. SPX 500, for example. This candle looking not as promising, and still for me, this one is kind of a ways away before looking to buy anything. But who knows, if this dips long enough, my favorite trade setup ever is to buy stocks that I love. So, you know, it's great to trade currencies and to trade, you know, individual things like that short term. But for me, some of the best trading setups are dips on the stock market where I can buy stocks that I really like longer term. I mentioned that for me, my best trade ever is one that I'm still in from over a year ago, which you might say, well, that was an investment, but it really started out as a trade that I just have held on to and trailed stops for a very long time, which was Tesla. I bought Tesla back in 2020. And this thing has been a dramatic winner here for me overall. Speaking of Tesla, you can see it gapped down today, finding a little buyer on that tiny green candle there today. But I bought this one back in 2020. It was a massive winner for my account. Still to this day, the best trade that I've ever taken. I did want to buy the stock for a long period of time if I could, but I did have limits in terms of, like, if it went down to a certain point, I would just close out in case the markets wanted to roll over lower. So this was to this day my best trade ever. So if the stock market does want to pull back, like I said, I'm not afraid of a dip, because it could be a good opportunity to look to re-enter some of the stocks that I like, and maybe even some short-term trades as well for the currencies. So just going to be interested to see how that plays out. Did I look at Euro USD already? Yes, I did. It was one of the first ones that we did today. So you can check that back if you'd like. Euro bullish on ECB raise inflation target. Did we have some sort of news? Let me see if there's anything out from forexfactory.com. So we have crude oil inventories today. So we don't really have any major news announcements today. ECB's, so okay, interesting. So ECB's Lagarde says we are not where we want to be on inflation. New goal, not pushing out eventual policy tightening. ECB's Lagarde will see through the current high inflation rate. Okay, interesting. Let's go really quick, re-look at the Euro USD. Is that just now news? It does show, you've got the euro strengthening overall and still at this level that we talked about earlier, which is this resistance at 1.186. We also pointed out that you've sort of got a retracement level here as well. You got the 38.2 being tested. So yeah, that's still on my radar is the Euro USD. Seeing how this candle closes could be interesting as well. And like I said, you've got on this 4-hour candle. Hold on. Oh, I think I was wrong about that 4-hour candle closing, because we've still got 3 hours on this one. Oh, what was I looking at before? Maybe I was looking at the 1-hour chart without meaning to. Yeah, you can see over here, it tells you like how long is left on the candle on TradingView. So if I go back to Euro USD, yeah, so we've still got, 3 hours there on this candle. So we'll see how that one wants to play out. But again, a very interesting time in markets, I will say. It's quite scary. My stock portfolio is is all over the place, and some of my currency trades didn't go so well recently. So I'm sort of on the sidelines and just taking a pause here. But this happens. We've had really good trades overall in the last several weeks, several months. So I'm not too concerned. I'm just looking to play it safe and wait for re-entries on some of these currencies that I'd like to be long on. And again, if things stay risk off, I'm not opposed also to maybe shortening or shorting some of the ones that I was used to be long biased on, right? That's part of the thing about being a trader, is looking to adapt and play into what is working and to reduce what is not working. So, maybe we see opportunities to go long on the yen or, for example, like Euro yen could be one to potentially look to short. Maybe you see things like pound yen as a potential short. Again, just going to depend how everything closes out today and what the latest news is on some of these currencies. So with that said, guys, I'm going to wrap up today's show. Thank you very much for being here. I hope you got some value out of the stream. If you're new to my channel, make sure to subscribe down below and hit that like button, and we will see you back in the next one. Thank you very much.
I know you were expecting Nick, but my name's Julie and I do the real work around here. I wanted to take a second to thank you guys for watching the show and tell you more about some free content that we offer. One of the things that we offer is a free email newsletter. So if you click the link down below, you can sign up for free market analysis, trading tips, and exclusive offers. Every once in a while, someone here at A1 Trading takes a crazy trade and you'll be the first one to know about it. See you guys next time.